Hello everyone, welcome back to FX 20 Pips. Today is 20th of January. This is my time, GMT plus 8. It just passed midnight, quarter past midnight, and that's why it's 20th of January 2023. Currently, I am looking at the GBPUSD and the 8 hours chart. All right, and if we have a look at the 8 hours chart, we can see that price has finally cleared the liquidity, and price as expected, once it's cleared the liquidity, it has gone through a block. All right, initially I said to everyone that this is one of the block that you will hit, but obviously you look at the 8 hours, the price just shot up, ignoring this block. Okay, but then it has a reaction. Okay, there's a reaction due to these order blocks here. All right, so if we were to scroll out and look at it, okay, we can see that this is actually the correct. This is the actual correct placement of the order block because it's at the top of it. All right. Initially, why I put it here is because of the bearish candle here. Okay, the wick of the bearish candle here. Okay, and that was the reason why I initially had this block here, but then I also currently pointed out this block. Now the thing to see is also that when price touches this block, when price touches this block, it immediately comes down and still hover around this block. Okay, so I'm half correct, but again, I don't want to win all the time. I don't want to say that my chart is the best. No. All right, but at least it give me an idea that okay, if it's go up there, you might just hover around this area. Okay, so just a quickly looking at the fib, why does it hover around that area? All right, that is the day. This is the day it came up, come down again. So let me say, put it here, put a fib here. Okay, so because it's, well, I mean, simply looking at a fib is coming back to 61.8 area. All right, so price went up, you need to retrace this. Okay, so it retraces all the way back to this area. Okay, now irregardless, the price did actually go up to this block. Now let's before I move on further, let's look at the 8-hour candle box. Here we have. Now previously, if you have followed my video, I talked about the first candle, the second candle, the breakout, followed through, the indecision, and then the bullish breakout. Okay, with a good news. Now, so we no longer require this 8-hour box now. Okay, so at this stage, I want to do this together with you guys. Let's just move the 8-hour box. All right. So where should I move it to? Now, one of the better area to move. There are two areas here. Okay, this can be the top of a new 8-hour and the bottom. Okay, but then I am looking at this one, this second one. Why? Because this candle and this candle did not close below or above this 8-hour candle. All right, so I'm just going to make a smaller 8-hour box, candle box here. Okay, rather than a big one. Okay, reason is because price has been going up here. So the next thing is that I'm expecting the price to retest this area again. All right, so let's move the 8-hour box. Okay, make sure you have your magnet on here. Okay, so it's much easier. Drag it here. The magnet will connect to this point. Just suspend it. Bring it up here, the low of this point. And here we have. Now we have another 8 hours box range. All right. Okay. So my expectation is for the price to go up. Why? Okay. Reason is I look at the behavior. Now, no doubt this is the one touch, two touch, it drops. There's a double top here. Okay, double top here. And you realize that it reaches here and it drops a lot. Okay, what happened this time? It reaches here again, it only drops to here. All right, and then now it seems to be going up again. All right, so expectation, okay, or rather expectation and probability. Let's say the probability of it going up is much higher now. All right, because you can see that the bearish candle is much smaller than the bullish candle here. All right, and that's the reason why I said that probability of it going up is much higher. All right, what else? What else do I need to tell you? Okay, yes, I have also marked out the monthly resistance and support. So let me just have a quick look at it. Okay. Yes, now when I change to the monthly chart, okay, I like to find the resistance point and mark them down. So for example, price come down, goes up here. So I will mark this point and you have a date here. Price goes all the way down. All right. Okay, I also mark this one is because price reject goes up here. That's why I mark this point. Okay, then price went down, come all the way up. And this is on the 14th of December. Okay, this is the point of 14th December. Then you should realize that I don't have, nothing is marked here. All right, nothing is marked here. And maybe this block shouldn't, this order block shouldn't be there in the first place. Okay, because based on the monthly charts, it's nothing significant there. Okay, so this one looks okay, this one looks okay, and this was the one that I marked. All right, and the date of this point was 14 December. So resistance was there and price actually went up there, hit the box. Okay, so all this marking that I've done previously, it does come back and helps. All right, so at least I know that now price, there's a resistance here. Okay, so that means that if price were to keep going up, break the order block, you can stay above this line. Well, what's the probability of it going up? Pretty high, isn't it? Because there's no other resistance here. Yeah. Okay. So let's go back to 8 hours. All right. So we have the new 8-hour candle box. Now what I'm going to do now is to delete away this order block. Okay, the previous resistance, the blue line that we have, this and this. Yeah, because this is the same as the monthly one, so I'm just going to delete this one. This is of no use now. I'm going to delete this one. Okay, let's go down to the 4 hours. 4 hours. Okay. Do we need any 4 hours in the box? No, I don't think so. I think this is what it is. The 8 hours really encompass the 4 hours. So this will remain there. All right. Let's go down to 1 hour. See what's been happening. Okay, let me just remove the 8 hours in the box. All right. 8 hours candle box is removed. So as usual, I have my buy zone, sell zone. That's for yesterday. All right. This is yesterday. This is today. So this is 19, this is the 18 according to my time. So past midnight, it's past midnight an hour. So up to here, this is 20. Okay, the date. Right. So yesterday price went up, hit the block, came down. All right, retraces. Okay, and then the 19 Asia session, it just range bound. Why? Because of the US news. Right. So once the US news came and then gone, price started to move. Okay, breakout of the buy or even a sell. So price decided to go up. Right. Now let's go down further to 5 minutes. Okay. Just going to briefly touch about yesterday when the price moved up to the block. Okay. If you were actually looking at the price, okay, and you, let's say if you are not in any trades, you would actually look at the price that comes in. Look at the price, reject the order block, price then went back up, and then price start to reject again. And now when you see this long wick here, okay, bearish candle, I would have already started to sell. Okay, the moment price pass below this point. All right, stop loss is basically just here. Make sense? And then you just have to take the price down all the way here. Okay. All right. So that is how you would trade the order blocks this way. So where are we now? So the price is at this stage. Looking at it, it touches the order block, comes down. Did it break any structure? Let's look at the structure again. Let's go to 1 hour. So let's look at basic structure. Okay, price come here, up here, traces here, break, new point, come down here, stay above here, drop a bit but still did not cross this point. All right, this is a low point, and then price went up, break a structure again. Okay, so we have a low point here, come down, did not retrace 50%, but I think it's about 23. Break a structure again. Okay, 1 2 3 4. Okay, come here, this is one of the main structure point. All right, so price hit the order block, comes down, stay around here. Right, so basically price did not, after it hit this order block, price did not go further to break any structure. Okay, price did not do this. Price is still above this level. Right, so if price is not going to come down, okay, if price is not going to come down here, then the probability of it going up is still very high. All right, you might say that price might react again here. Oh my god, you could say that price might go up, react here again, and then drop. Yep, it's one of the possibility also. Okay, that's why we need to have multiple scenarios to help us to trade. Okay, but then price may also then just keep going up. Okay, so which one do we conform to? Well, we don't know, isn't it? We just gotta follow the candle. All right, so let's look at this one. Let me zoom in around this area here. So let me go to 30 minutes. Okay, 15 minutes. Right. What do we have here? 5 minutes. Okay. Now, basically, to because this order blocks is sort of already um, been used, right? When before the price touch here, you can say that okay, price should react here, but because price has already reacted, we don't expect price to just react the second or third time. Reason being, you need to find new order blocks. Okay, this could be the old order block. So let's find the new order block as a result of this rejection. Okay, so this is how I will look at it on a 5 minute chart. All right, I think that this will be a new order block. Okay, the previous one will be here up to here. Right, so we have two new order block as a result. As a result of this uh, price coming in, right, went back down. So price create another two order blocks, two smaller order blocks, one and two. Okay, one and two. Um, this is small order blocks, mind you. It's only a 5 minutes one. Um, price might not respect it at all, but we should expect some reaction. Okay, reaction such as price is going to come up back here again. Okay, he might come up here, come down. Okay, if buyer is still strong, you'll push it up again, take up this one, push down again, and then finally push through. Okay, one of possible scenarios. The other one is this is one, this is two. Price might just come back here, okay, and then drops again. Drop back here, take out the liquidity here, and before start up again. All right, which one is possible? Any one of them is possible. Remember, we can only uh, give ourselves as much possible scenarios as possible and then trade accordingly, looking at the candles when it comes around here and comes around here. Okay, right. Okay, let me go back to 1 hour, go back to the 4 hours. Yeah. And remember our previous old order block that I said the price went through. Yeah. So I have the trade and I closed the trades. You know, when I talk about all the liquidity and how price is going to go up to the block. So I have trades and then I close it when price is around this area. Okay, if I know, I can't remember the exact figures. Okay, because during that time my idea was that this block could have some reaction, right? But no, the price just keep going up and actually reacted from this major block. All right, so I have like a small amount remaining. I didn't close all of it. I think I closed 90%, and then the 10% I let it run, okay, to see how far it can go. All right, and then it just come back down here. I still have the 10% running, okay, because there's no reason to sell really. I take this as the retracement. Okay, so I'm able to take this retracement and then see whether it goes up again. All right, because at this stage, what I'm looking at is this is all N wave, all bullish wave. Yeah, so it should go up like that, right? Okay, even if it wants to come down, it has to go into a range, right, before it start coming down. So when I start to see a range, then I might just close the trade or anything like that. Okay, unless something bad happen, then you will see this type of V shape. All right, but don't forget this is a 4-hour chart. Okay, so in order for price to revert down, it has to change from a bullish one, range, then start coming down. Yeah. Okay, I have not seen a range yet based on the 4-hour chart, so I'm just going to maintain my 10% runners trade, and yeah, just leave it as long as possible. Okay, what else? What else can I tell you more? I try to give as much information as possible to you guys, but then doing a video recording is without two ways interactions. It's just me talking to you through the chat. So I can only like tell you what I think at this very instance. If I'm doing live and then you ask me questions, then maybe they'll be beneficial. But then I have to fix the time. Everybody gonna come in, and I don't have my own studios where I can lock myself in and stay in here at a appointment time with you guys. It's a room that I share with my kids. So it's like previously they're playing games and then they could be louder than me, and you would have want that in this video, right? So I still think that for me to come to one, I talk through the video and try to explain to you my thought process about GBPUSD, and then maybe you can learn something or one thing or two. All right, so I try to do it every day so that you see the chart every day, see my reasoning every day, and the more you see, hopefully, the more you will get the idea. All right, doesn't mean that my way is the right way. No, okay, but I can tell my way is the simplest way, pretty clear. All right, we don't use too many other indicators. We just look at the candlestick. Candlestick tell me it's bullish, we buy. Candlestick tell me it's bearish, I will sell. All right. End of the day, you can use my chart and then compare it against your own self. But then you are the one that take the trades. Okay, you decide when you want to buy, when you want to sell. All right. So okay. All right. So now I'll keep on rambling about nonsense things now. Okay. Now if there's nothing worth else for me to tell you, I'm gonna just stop. Let me just look at the other things I have. Just hang on. Okay, events. Right. Okay, so okay, so I do mark up a lot of items. Like I mark up when the FOMC meeting was. This is the fourth FOMC that comes with interest rate increase by the US. Okay, the first one was this one in July, and then throughout the chart you can see post 2, 3, and this is 4. Okay, so the last time the US increased the interest rate, the price dropped, it went down, and now it's back up to this level, about the same level as the post FOMC opening. So basically, it means that whatever interest rate that is built into a US dollar currency, the GBP's side seems to um, taken the news, and then now it has recovered. All right. And if you remember what I said in February, 1st of February, there will be another FOMC. Okay, so the consensus of the majority is that it's going to go for 0.25%. All right, and yeah, if I don't know whether the GBP would go down again and then rise up from then on, but um, yeah, just to take note that you know 1st of February, price might try to go up a little bit, and then when the news comes, depending on how the market take it, the market might drop from them or might increase. All right, because it's 50% chance, isn't it? Okay, but based on what I have seen previously, okay, from all the rates increases, this is the first rate increases, second, third, fourth, okay, the GBP has is still been going up, okay, it's still rising, okay. Can you imagine if US stopped increasing the rates? What will happen? Well, if you look at all these previous ones, maybe price will shoot up. I don't know. I can only have some scenarios in my mind and then I react to it according to how the candle is showing to me. Okay. What else do I need to show you? I think that would be all for today. I don't want the video to be too long because I need to edit the videos and then upload to YouTube, so that will take easily another hour. So I like to post these videos as soon as possible when everything is still fresh for the chart. Right. Hope you enjoy um, this video, and I'll see you again. Thank you.